You should, Raghu and Paul are here next to stick around. I mean, I don't even know how to introduce them. I mean, you know, the easiest way would say Raghu has developed, grown businesses that generate over $1 billion worth of revenue. Paul is with Pantera Capital that has over $1 billion in this market. So in this crypto, right? In blockchain and crypto. So they're the only two similarities I can find. You're both mega billions in this particular environment. I know Raghu comes from a heritage of the East Coast, the Ivy League, then having worked with the current CEO, chairman of Google right now, is developing his connected the West Coast money, East Coast brains, and developing Falcon X, which is an amazing company. Paul, I know you're doing amazing things. I'm so looking forward to this conversation. Thank you both for coming here. I'm going to let you guys have a conversation, but before you do, introduce yourself, talk about the beautiful things that you're doing and where we're going with what you've seen about 2020, what you think about some of the things that we should be looking out for 2021. Your topic, evolution of cryptocurrency, and I know you guys were there with our last panel and heard a little bit about that, put things into perspective for us. Thank you guys. I'll let you go on and jump in about 1:20, in about 20 minutes.
Perfect. Thanks so much, Kareem. It's really a fantastic opportunity to be speaking with you, all of you. I'm really excited to be hosting this session for the next 30 minutes. Today we have Paul, who is one of the very few people in crypto who has the vantage point of working knowledge of crypto within different geographies. Centralized infrastructure, decentralized infrastructure, he invested, he has working knowledge on both of them, and more importantly, both on the retail and the institutional side. So really excited to basically cover the topic of evolution of crypto. How did crypto evolve thus far? Where is it at the moment? The previous panelists did a fantastic job in talking about DeFi and some of the microstructure things within crypto right now. We want to be able to cover a little bit of that and also more importantly, talk about the future of crypto. Where is crypto going? So very excited to have you all. And I want to parse this conversation into 3 buckets. A quick round of introduction. I'll go first and then Paul is going to go. The second is evolution of crypto, starting a little bit with the past, a little bit about the present, and mostly spending time on the future. Where is this evolving? The third, Q&A. We'd love to basically see a lot of questions from you guys. Before the panel, I think on LinkedIn, we already pulled up about 4 or 5 questions, but if you have more questions, we'd love to basically try and answer that. With that, I can quickly get into the introduction. I'm the co-founder CEO for Falcon X. Before Falcon X, I'm an engineer by background. Did machine learning back in the day when it was not that cool because for the longest time it never worked. Graduated with a machine learning degree. After that, a serial entrepreneur. After that, graduated from Harvard Business School. After that, I was very fortunate to work on Sundar, who's now the CEO for Google and Alphabet. Worked on his team, led a couple of different products. Some of the brightest minds that I know in Google are excited about cryptocurrencies and blockchain. And for the longest time, I thought this is a Ponzi scheme. And until I spoke with these guys, I really fell in love with crypto, what that could potentially mean for the world. So with that context, I politely transitioned from Google and started Falcon X about 2.5 years back. A quick 60-second intro of Falcon X and what we do. Falcon X is one of the largest trading platforms out there. We serve institutions only. We're building towards a prime broker. To give you the context of the scale that we operate in, November we did about $2.75 billion of volume, all from institutions. And in terms of what it means for a lot of audience on this call, a lot of people are like, navigating crypto is confusing. There are a lot of questions. Who do we custody with? How do we access the infrastructure? How do we manage inventory? We solve all of that. We are a one-stop shop that can help you all the way from, with our partners, of course, all the way from what is crypto, how do I get exposure, how do I get set up, to how do I manage millions of dollars of trading strategies on a monthly basis, optimize for execution, manage credit, think about custody, think about security issues. We handle all of that, as a provider of prime services. With that, I'd love to basically pass on the mic to Paul, who I'm very excited to have this conversation with. Paul, if you can introduce yourself and also Pantera, that'll be great.
Yeah, thank you so much, Raghu. I'm Paul Bradatakit. I'm a partner at Pantera Capital, and I do want to say that Falcon X is, a very, very needed service in our industry. If you sort of know what you want to accomplish with your crypto portfolio, the space is so fragmented. You need someone like Falcon X to sort of be able to more easily get you access and good pricing. And so we actually are really big supporters of Falcon X. So, really excited about what you guys are doing there. My background, I graduated from UC Berkeley. So I've been in the Bay Area for about half my life now and have a sort of a circuitous background going into venture. I started off my career as an economic consultant, working in financial services and doing a lot of economic and research and financial modeling. And then I got into startups. A lot of my friends were doing startups, and I started doing business development and growth for some early stage startups in the daily deal side, help them fundraise to some Series A rounds. And then, instead of going into the operational side of things, I went to the dark side. I joined a VC fund in 2010, and I thought that mobile was going to be huge. This was really early where there were probably only a few mobile apps that had over 1 million downloads. And I thought this was going to be the next biggest thing, similar to what I think about cryptocurrencies. I went all in, went to a fund that just focuses on mobile, made some great investments, including a unicorn called App Annie. And then for the last 7 years have been focused on investing into early stage companies for Pantera Capital. So quick background on Pantera. Pantera was started by Dan Moorhead, who was the CFO and head of global macro trading at Tiger Management, one of the world's most renowned hedge funds in the 80s and 90s. And Pantera has launched a suite of products. All we do is provide investment products for investors. So everything from a Bitcoin fund, that's almost like a Bitcoin ETF where people just buy Bitcoin through us. We have a VC vehicle that invests into equity in startups, equity into companies like Coinbase or Ripple, Falcon X would be another example, et cetera. And then an ICO fund that has helped people invest into early stage token projects before they launch. So examples would be 0x, Filecoin, Polkadot. And then investing into a last fund, which would be our digital asset fund, which invests into cryptocurrencies that are already on the secondary market. So Bitcoin, Ethereum, but mostly other tokens that we think are going to be very valuable later on, and very smart index investing, creating an index for people to kind of feel comfortable and rebalancing that index, et cetera. So those are all the different strategies. And the third partner with our fund is Joey Krug, who's the founder of Augur. So we sort of have this hedge fund, financial institution background with Dan, sort of VC background, early stage investing with myself, and Joey with more of the operational technical background. And so I guess more relevant for you guys is if you guys are interested in more of an active strategy in the space, feel free to reach out to Pantera.
Perfect. Thanks so much, Paul. And give us a fun fact about yourself, which is not widely known.
Yeah.
And then we can jump into evolution of crypto.
Of course. So you guys probably see this monstrous last name that I have, and most people just call me Paul or Paul V or something that's not my last name, and kind of wonder where is it from. So I am ethnically Chinese, but I'm learning Mandarin right now. But my last name stems from my culture of Thailand. So my parents grew up in Thailand and have a Thai last name, and so I'm proud to sort of represent Southeast Asia and sort of Thai VCs out there. So that's probably one interesting fact is people look at the last name and they ask if I'm Indian, but they look at me and they're like, no, you're probably not Indian, and just skip the last name. But that's kind of the origin of the last name.
That is great. Perfect, Paul. What are the,
Oh, and I guess you're talking about the evolution of the space. I mean, I can give you a little bit of color on how I've seen it. And, I guess coming at it from someone that's been in the space since early 2014, man, when I joined the space in 2014, it was a lot of cypherpunks and libertarians and people just coming at it from just the technology side of things. 2015 really started to see some early entrepreneurs, some guys coming out of MBA school, some guys coming out of financial institutions starting to think about this space. And then 2016 was just, people just trying to find a lot of product market fit, especially around the enterprise side of things. We started seeing the, things around R3, things around Corda, banks thinking about, what they can do in crypto, patents evolving, but, those guys are really slow to move. And then 2017 was really just when Ethereum started to gain traction. People started creating open source companies where they can, generate value in a token and crowdfund. And that was the first, I think, significant bubble that we saw sort of in more mainstream. And then I would characterize, and I think that's great for the space. Every single time there's a bubble, even though there's a lot of money to be made and there's a lot of money lost because people are the market crashes and that sort of thing. But it brings a lot of great talent like yourselves, coming into the space right after, and a lot of visibility into the problems that need to be solved. And also a lot of capital that comes into the space to be able to support that ecosystem. And then 2018, 2019 has been a lot of building and a lot of just figuring what we need to do to support the next bull run. And I think this is kind of where we are. We're sort of in the beginning stages of what we think is a much larger bull run than 2017 and something that's much more exciting.
That's a very interesting characterization. I have a follow-up question, but before jumping into the follow-up question, that's a great segmentation, right? The 2017 bubble attracted some of the very best talent. To give you that perspective, people used to say in 2007, 2008, everyone and their dog was going from Google to Uber. 2017, the same thing from Google to Coinbase. So
yeah,
2017, 2018, as you said, the space absorbed some fantastic talent worldwide. And after that, a lot of infrastructure was built. And a follow-up question on that, Paul, I think, how is this bull run different from what we saw in 2017? How would you characterize this?
Yeah, I can categorize it from two different angles. One would be the entrepreneurial ecosystem and how that's a lot different, and the types of projects that are fundraising right now and gaining traction. And in 2017, it was really about solving problems around scalability mostly, and some new use cases around decentralized storage and whatnot. So some of the more successful projects are ones that garnered a lot of VC interest that are still around from that generation are companies like Polkadot, companies like 0x, companies like Filecoin, again, around how do we make, how do we go from a 56K modem to sort of a cable modem? How do we enable some of these really cool use cases around financial transactions and et cetera? And so that was the theme, but surrounding around some of those legitimate companies were just a lot of scams. A lot of people saw that there was a lot of retail interest in this space, and the bar to invest into projects was, completely just eliminated. And so there's just a lot of money making and a lot of money losing opportunities here. And so I would say we would see 50 projects a week trying to fundraise, and maybe we'd come across one legitimate white paper. So the difference here in 2020 is we actually do have a lot of projects and a lot of products that are already actually functioning and are then adding on a token as their business model and actually have real use cases for the token, whether it's around sort of decentralized trading, decentralized lending, new algorithmic stable coins, decentralized, music player streaming, basically marketplaces and technologies that actually have a functioning use case for the token. So I think the rise of decentralized finance shows that people are actually coming out with products before actually launching a token. And I think that's a huge difference. I think the second difference would be around the type of people that are actually buying cryptocurrencies these days. One interesting, fact is that, when in 2017, when the price of Bitcoin went up, Google searches also correlated and went up with the price of Bitcoin. And you just saw that a lot of the interest was coming from retail investors that were FOMOing into the space. But, we're seeing a new class of people investing into Bitcoin and cryptocurrencies and seeing it as an asset class for diversification, especially with a surrounding pandemic. So a lot of smart institutional investors like Paul Tudor Jones or Bill Miller, or even Ray Dalio talking about it a little bit too, but it's getting in the minds of really smart institutional type hedge fund managers, to even companies like MicroStrategy, seeing this as a way to diversify some of their corporate treasury into an asset class that is non-correlated with the traditional markets and things like that. And then coupled with that, we're actually seeing more and more on-ramps for cryptocurrencies. PayPal and Facebook providing on-ramps for people to get into cryptocurrencies, I think is huge, because now we're seeing that there's more demand for cryptocurrency than actually new supply coming out. So that's going to push up the price. So I think we're seeing that the inflows that are going into cryptocurrencies are actually going in, buying the cryptocurrency, and then moving it offline. So everybody that's going into the space right now is more educated on the retail side and longer term holders on the institutional side.
That's great. I mean, one follow-up question specifically on the institutional side, and we are seeing this, right? I mean, with some of the world's best allocators, some of the names that you mentioned, talking about Bitcoin, a lot of institutional money, and with them, the associated regulation is also coming, which is good for the space. Now, why is this institutional money coming? You mentioned one factor about, the whole notion of inflationary hedge, the digital gold, very early on. Could you elaborate a little bit more? Because the global backdrop of the world printing $6 to $7 trillion in the next 12 to 18 months is very interesting, as we go through the Bitcoin experience.
Exactly. I think it's basically that, the fact that, this pandemic has really just brought out a ton of money printing and stimulus, and that with low interest rates and low inflation and things like that, it's really, people are looking for ways to make uncorrelated bets right now. People are knowing that the dollar is going to be devalued because of what's going on and what will go on in the future. I mean, with Biden, possibly issuing a $1 trillion stimulus next year, I mean, it's going to really, that plus everything else that's going on with the rest of the world, it's really going to, make things a lot tough for you to sort of, think about keeping, everything in fiat, and you're looking for different ways to make yield and and get asymmetrical sort of returns and opportunities. And the track record that we've seen with cryptocurrencies in the past in normal environments, you add on that sort of layer of risk and uncertainty with the markets, it makes cryptocurrencies a great store of value. And therefore, it makes sense to have a single digit net, percentage of your net worth or your assets into something like this that could provide those types of returns and or uncorrelated returns. And, speaking about institutional investors, when I talked to them in 2014, the questions that I got were, okay, tell me about Bitcoin mining. Who is this Satoshi person? And what's the chance of this whole thing getting hacked and going to zero? The questions now are much different. People know that the technology has worked. Bitcoin has not been hacked. It hasn't gone down. It's a lot different than a lot of other servers and a lot of companies out there. And, and security-wise and technology-wise, that's been sort of, taken off the table. And now people are kind of looking at, as you mentioned, regulations. Like, is that going to be a huge concern? And we've made a lot of progress around regulations. I'd say in terms of China and, them stating that they are looking for sort of, distributed ledger technology to be, prevalent there. They're launching their own national cryptocurrency, digital currency, and that should be fascinating. We're seeing, the OCC ruling where chartered and national banks can custody cryptocurrency. We're seeing things around bank discrimination on cryptocurrency companies being sort of removed, and we're seeing a lot of bit licenses and other licenses around trading cryptocurrency that are being issued. And it actually starts off with the US, and I think a lot of other countries will follow, but actually a lot of other countries are taking a lead in terms of trying to be places where, cryptocurrency companies can come and find really good regulations. So, I think China is one of them. I think Taiwan is looking to be a crypto hub. Gibraltar has issued licenses out there. We're seeing some movement on the FSA in the UK. So there's been a lot of things that have been de-risked on the regulatory side. And I think that's probably the only thing left to really start spurring a lot of adoption. I mean, even India, some places have taken a very negative view of cryptocurrencies at first. And then there was the, ruling that, they have to basically take away the ban, and therefore now crypto's back in India. And so I think people are keeping the lines of communication open and trying to figure this out. And they know that it's impossible to shut down. So might as well try to work and try to figure out where they can benefit from it while also protecting consumers. And so right now, I think a lot of the institutions are seeing a lot of the risk go away, and they're seeing cryptocurrencies as digital gold. You know what I mean? Gold with actually a use case, at least for Bitcoin's, sort of thesis.
That's fascinating. I think this is on the heels of that. This is a question that we got from LinkedIn. The stage seemed to be perfectly set. Good talent in the space. Institutions are coming in as the macro, is very strongly printing money, and then regulation is getting much more streamlined and stable. Where do you see crypto evolve from here, Paul?
Yeah, I mean, I think right now, some of the hurdles that crypto still has to overcome, I think regulations will continue to evolve. I think there's a couple of different things. I think talent is one thing. I would assume that at least one of your biggest challenges is getting more and more top talent coming into crypto. And I think bull runs like this will help, because even though I wouldn't equate price with the progress of the entrepreneurship in the ecosystem, it does get reflected in the fact that with higher prices means more mainstream awareness, means people are interested in the space and want to get involved with the space and somehow see problems with the space that they want to solve. And that's going to bring a lot more talent into this ecosystem. And that's the biggest challenge for our portfolio companies, is really how do we convince guys from Facebook and Google to leave their jobs and take less money and go into a space that has been maybe riddled with some nefarious actors and sort of bet the next 3 or 4 years. And so I think we're getting there. Like, one of my jobs as a board member is really talking to new talent and trying to convince them that this is a space to get into. But on top of the talent, I think we need to continue to solve the scalability problem. And now that we have Ethereum 2.0 and new blockchains that can help basically compete and provide alternatives to scalability, I think we can actually, handle some of the use cases around sort of heavy financial transactions and heavy smart contract usage that's needed for a lot of the decentralized finance, applications that people want to throw out there. And then beyond there, I think it's just removing access to cryptocurrencies, and you're solving one of those problems, solving the on-ramp problem. And then of course the customer experience and user experience. We need better designed products. We need to be able to better educate and onboard users and remove the friction and complexities of cryptocurrencies that kind of gets people confused around how do I think about public and private keys and things like that. And so I think as that evolves, we'll just open up the market size even more for people to come into the space.
That's awesome. I'm going to put you in the spot and ask you a question, a price prediction question, which is in 1 to 2 years, where do you see Bitcoin land? And we're not going to hold you to it.
We've done a lot of analysis as a firm, around pricing, and done a ton of modeling. So, I'll throw out what Dan Moorhead, one of my colleagues, predicts. He, based on all the modeling and based on actually some other people's research, I mean, we think number one, we think 2021 is going to be huge for crypto. I actually think 2021 is going to be the year of the institutional investing into crypto. We haven't gotten there yet. people are getting very close and people are getting educated. But 2021, I think, is going to be the year for institutional crypto to come in. It's going to be the year for Facebook to launch the Libra project. It's going to be, you know, more adoption from people, PayPal, more guys like MicroStrategy, more hedge fund managers coming into the space. So all of that put together, plus a $1 trillion stimulus bill by, you know, Biden, you know, Dan thinks, based on the models, that we'll get to a price of 115,000 in August 2021. I'm going to be a bit more conservative. You know, I think we can get to around the, you know, 40,000 range sometime next year.
Wonderful. One of the questions that came through LinkedIn as well, I guess this is, we're almost at time. Could you talk a little bit about central bank issued digital currencies and where they fit in the schema of crypto evolution?
Yeah, you know, I think a rising tide floats all boats. And, you know, the more that we can get, you know, digital currencies in the hands of users and people familiar with digital currencies, and, you know, more wallets in the hands of users, you know, I think that just bodes well for cryptocurrency adoption, right? And so, you know, I think that, you know, whether it's a bit more centralized or whether it's a bit more decentralized, a lot of central banks will think about, you know, digital money and being able to, you know, figure out what's going on with money flows and payments, and you know, kind of, you know, disrupt banking themselves, and, you know, get into that space. And I think it's good. You know, I think it's going to really propel the use of mobile money, and China's already been sort of a pioneer in that. And I think it'll just create more and more education and on-ramps for, you know, other types of digital and cryptocurrencies. And so I think it's great for the ecosystem, and, you know, we'll see what happens. I mean, I think it could also, you know, potentially sort of, you know, bring a lot more, you know, innovation to the space.
Wonderful. I know we're
at time, but here's the thing. I want the two things. So that was a wonderful history lesson and the evolution of crypto. I really like that. I'm sure a lot of people liked it as well. Two things. One is I'm glad you're a fan of Falcon X, and we're a fan of Falcon X, and we want Falcon X to go through a liquidity environment. So before that, we need him on our Link2 platform. That's and two, Paul, we need to figure out what in your portfolio companies we should be paying attention to, because there is this whole thing of which of these companies are actually going to get through Series C, D, and E, right? I mean, it's still an evolutionary environment in terms of companies that deal with crypto, and we've got to figure out what those are. So we're having our next event in March 9th and 10th, and the topic of that one is Acorn to Unicorn.
Got it.
2.0. Acorn 2.0. And these are the companies that we're going to be looking for. I hope you guys are there.
Sure. Yeah, we have a lot of exciting companies, and hopefully Falcon X will be one of our portfolio companies in the future. And, you know, a lot of them are sort of hitting that hockey stick growth. And I think some of them will get to, well, some of them are already unicorn status, and we'll see a lot more. And those companies could provide a lot of insight into, you know, how they've gotten there, and would be sort of interesting for, you know, for your investors.
Oh, no, great. Excellent. Thank you, Roger. We'll see you tomorrow, Paul.